This could be a once-in-a-generation decision. Do you buy property in Klang Valley or Johor Bahru? Klang Valley, it's Malaysia's proven stable property hub. But Johor Bahru, it's like the rising city that could boom once RTS and SEZ kicks in. Now, if you make the right move today, by 2040, you could be 5 or even 10 times richer, not just in money, but in the lifestyle that you can live. So today in this video, let's break it down, and by the end of it, you will know exactly which city could fit your goal better. You see, for decades, Klang Valley has been Malaysia's heartbeat. It has the corporate HQs, MRT line, mega malls, and the highest paying jobs around. Johor Bahru, on the other hand, used to be seen as this little town that is cheaper and riskier, often too dependent on Singapore. But today, that story is changing really fast. The Johor-Singapore RTS link is already 56% completed and will be open in 2026. When it's completed, it's expected to move up to 180,000 commuters daily between Johor and Singapore. And earlier this year, both governments launched the Johor-Singapore Special Economic Zone. It is a plan that's projected to create 20,000 high-value jobs within the next 5 years. Today, when we are debating about buying property in Klang Valley versus Johor Bahru, it is really a comparison between a mature city versus an emerging one, stability versus growth. So the real question is this: which city could grow your wealth and your lifestyle significantly by 2040? Now, let's start with Johor Bahru, because the transformation in Johor is happening really fast. Right now, property prices are still much lower than Kuala Lumpur. According to the Global Property Guide 2025, rental yields in JB is averaging between 5% to 6.5%. This is much higher compared to the 3.5 to 4.5% in Klang Valley area. Well, this is because the entry price in Johor Bahru is actually smaller. Therefore, with the rental return in Johor, it does bring about a higher rental yield. But the real strength and opportunity in Johor property is not really about affordability. It is actually the future possibility of migrations and business relocation. Now, with the SEZ and RTS in motion, Johor Bahru is becoming a magnet for both people and companies. Here's what's already happening. You see, Malaysians working in Singapore are choosing to live in JB full-time. What happens is they get to earn in Singapore dollar and then spend their money in Malaysian ringgit. Sounds like a pretty good deal, right? And it's not just Malaysians, Singaporeans and expat today are eyeing JB's home as a second property because the prices are simply 4 to 6 times cheaper and also way bigger lah. Now, young Malaysian family from KL and northern state are also starting to move down south for career opportunity and also at the same time taking advantage of the slightly lower cost of living. With this migration, it means real sustained housing demand. People who are gonna live, rent and work in JB. And why is this happening? Well, because many businesses today are starting to think about moving to JB. With all this lineup of incentive in SEZ, companies that are setting up in Johor can enjoy lower operating costs than Singapore, faster logistics and cross-border trade, and a whole bunch of tax incentives that are similar to early Iskandar policies. According to MIDA, the SEZ aims to attract industries like data center, green tech, logistics, and advanced manufacturing. With that in mind, for many companies, Johor today is offering a Singapore-Malaysia advantage. I mean, it's very close to Singapore's global market, but at the same time, you get to enjoy the cheaper Malaysian labor and costs. So, when businesses are moving in, jobs is gonna follow, and families will follow as well. When people migrate there, property demand will accelerate. And we have seen this kind of pattern happen in other countries before. China, Shenzhen, when they had the SEZ, their growth multiplied the property value several times in just 20 years. And with Johor Bahru having the RTS, we are also expecting property price to increase. In fact, the same thing happened in Hong Kong when homes near MRT station actually cost 20 to 30% more than homes that are further away. So the big question is this: could Johor Bahru follow the same path? Well, it really depends on how fast the SEZ deliver, but it seems like currently all the ingredients are there lah. It's just all about execution. Anyway, that's for Johor Bahru, the Malaysians' new growth engine powered by new jobs, migration and new infrastructure. But while JB is still building the momentum, Klang Valley still remains as Malaysia's most stable and established property market. And let's look at why. Klang Valley is Malaysia's economic fortress. Its stability is the biggest strength. Now, according to DOSM, the average household income here in Klang Valley is around 13,300 compared to 8,500 in Johor. This higher income means that even during slowdowns, people in Klang Valley can still afford to buy and rent. It is also Malaysia's most liquid property market. If you need to sell or rent a property fast, Klang Valley property definitely move faster than anywhere else in Malaysia. And beyond the liquidity of the property market here, it is also about the ecosystem. You see, here we have established MRT and LRT line, we have world-class universities and hospital, we have all the big corporate HQ, shopping malls and job clusters here. All these things create a long-term resilience. Even when prices don't go fast, well, properties in Klang Valley, they don't really crash very hard as well. But the trade-off is this. The entry price here is generally higher and the growth in the market here is a little bit slower by average. And that's what makes KL properties a safer and long-term play. Let's not forget, Klang Valley's next growth wave is already in motion. Remember the proposed KL-Singapore high-speed rail that could reshape the entire southern corridor. Also at the same time, the MRT 3 Circle line is now officially under construction. This will connect the previously isolated suburbs into a complete 360 transit network. Try to think of it like London or Japan, where every single suburb is connected to each other. And let's not forget, every time when a new station, new rail line comes online, the surrounding property value tend to rise. Just like what we saw after the MRT1 and MRT2 launch. So, while Johor Bahru is actually gaining momentum today, Klang Valley is also quietly setting up its own next leap forward. So, seems like still got a lot of growth space for Klang Valley as well. So, now we have seen both sides. Johor Bahru gives you growth and affordability, while Klang Valley gives you stability and liquidity in the property market. But here's the thing, numbers is what matters. At the end of the day, you're not just buying a story, right? What you want to buy is the returns. So let's run a quick thought experiment to see what would actually happen if you invest in each city today. Assuming there's two investors, Investor A and Investor B. Investor A buys an 800,000 ringgit condo in Klang Valley. Investor B buys a 500,000 ringgit condo in Johor Bahru. Now, if we project forward by 20 years, Klang Valley could grow at 4% a year. Now, that will be worth about 1.75 million 20 years later. If you add in all the rental income and all of it, could come to about 2.5 million. Let's say the ROI is about 212%. Now, when we look at Investor B in Johor Bahru could have a higher growth. Let's say, assuming it's growing at 5.5% per year, that will be worth around 1.33 million. And when you add rental income, the total is about 2 million ringgit. The ROI on the other hand is 300%. So, here's the thing, in absolute value, KL definitely gives you a bigger pile of money. But in percentage term, JB property could deliver almost 90% higher ROI efficiency. In other words, you earn more for every ringgit that you invested. And this is why in headline today, many people will say this, JB property is very hot and could deliver you better return. Now, at the end of the day, all these are average numbers lah, obviously. But agak-agak, this is what we are looking at. And ultimately, this is a simplified example and real results will depend on where you buy and who you buy it from. Which brings us to the next biggest point in property investment, the property developer. Many people ask me whether is it important to have a good property developer. Well, obviously it is important. Strong developers like Sunway Property, UEM and EcoWorld, they don't just build property, they plan infrastructure and ensure long-term upkeep and development of their project. And that's what keeps a project's value strong even after launching. Now, very often, weaker developer can destroy ROI even when it's in a good location. In fact, to understand this better, we spoke to Sunway Property. It is a master community developer behind the Sunway City Kuala Lumpur, one of the longest and most established township here. And here's what they say.
Sunway City is an integrated township built on the vision of creating a balanced, sustainable and livable environment.
In Sunway City, Kuala Lumpur, we encourage people to walk via the link bridges, and we are trying to create a 15-minute walk city so that people can take the public transport, come in and walk. In Sunway, we are trying to build the building like a mini Singapore or even like a mini Tokyo, so that is a very livable space for people.
As part of Sunway's legacy, in the future we are not just about buildings and infrastructure. It is also about shaping and building the right community with more vibrant and more inclusive community, which is why sustainability, innovation and livability is not an option. It is essential for what we have to build in the future.
Well, and that's why before you want to chase for price or yield, always check the name behind the project. Make sure it's an established developer. Anyway, we have to thank Sunway Property for working with us to bring to you this video. Now, if you are exploring property right now, check out Sunway Property's Big Deal campaign that's happening nationwide until November 30th, 2025. Visit any Sunway sales gallery to get an instant welcome gift, and you could stand a chance to unlock 10 million ringgit in reward, including cash prizes, luxury travel, and lifestyle treats. They got 16 projects across Klang Valley, Johor, Penang, and Ipoh. So wherever you are, there's something for you, including new launches from their signature home series. At the end of the day, property is not just about the returns, it's also about how you want to live your life. You see, if you choose Klang Valley, you're choosing a network density where startups, MNCs, capital all have come together. For people who want to have a career growth and influence, often it definitely does look like Klang Valley is actually the right choice. But if you choose Johor Bahru, you are choosing a little bit more flexibility and also opportunity. I mean, you get to earn in Singapore dollar, work with more Singapore company, and live in Malaysia cost. Well, we call that Johor arbitrage. And I believe there are going to be more and more people doing that once the RTS is open. On top of that, with SEZ, we are talking about industries like tech, logistics and manufacturing that are growing fast and building their roots there. Johor could be Malaysia's version of Shenzhen in future. And why is that important? Because between 2014 and 2024, Shenzhen's millionaire population grew by 142%. Because those who moved in there early did not just buy homes for investment purpose, they also bought into the city's future opportunity. So that could be part of the future if you're looking at a Johor property. But before we go too far, let's stay grounded a little bit. At the end of the day, both cities comes with its own risks. For Johor, RTS and SEZ could delay, and that could slow down the property appreciation. Oversupply could also happen, and that could compress the yield because right now it's very hot, everyone is going there and building more and more projects. Another thing is this, there's this huge dependence on Singapore's economy as well. This could be both strength and risk because when Singapore economy is not doing well, this could affect Johor as well. And finally, when we are looking at so many different projects happening down there, you gotta be a little bit careful when you choose the developer because more and more people are just gonna build, and sometimes they may not be very good developers lah. But Klang Valley property has its risks as well because number one, the entry costs in Klang Valley property tend to be higher, and especially for first-time home buyers, that's a thing lah, huh? Then since Klang Valley is a more mature area, the growth could be slower as well comparing to Johor Bahru. So at the end of the day, as a property investor and home buyer, you gotta understand all these different factors and plan around it. So to help you make better decision on where should you buy, whether Klang Valley or Johor, well, we came up with a simple 4-step plan. Step number 1, you got to define your goal. Do you want more stability or you want faster growth? Step number 2, you got to match your time horizon. If you're looking at only below 10 years, maybe Klang Valley could be a safer thing. But if you're looking at 10 years to 20 years, your time to wait, JB with RTS and SEZ development, it could stand with better potential. Either way, if you're looking at a long-term horizon of over 20 years, both can perform well. And finally, step number 3, use this checklist. first check the developer reputation and track record. So make sure that it is someone who can deliver and will maintain and continue upkeep to develop the value of that project. Secondly, you got to check the project distance to any form of transit like RTS or whether is it in the zone of SEZ. Thirdly, you want to know what are the infrastructure surrounding it, what is confirmed and what is projected infrastructure. So don't just simply fall for it. And the next thing is to know whether is there really a local demand base or is it just purely dependent on foreigners. Finally, can you tahan if your cash flow is under stress? At the end of the day, investing in a property is a lot about cash flow. If you can't take that risk, don't do it. If your project clear all this, well, I would say that it can't really go that wrong lah. So here's the big picture. Klang Valley property does offer a lot more stability while Johor Bahru offers a lot of growth opportunity. At the end of the day, it's your choice which city and which property matches your goal. So here's the thing, if today you have 500,000 ringgit to invest, would you rather invest in Klang Valley property or take advantage of Johor Bahru's upside? Let us know your thoughts in the comment below and I'll pin up the best debate there. And also if you want us to do a full deep dive on whether Johor can become Malaysia's next Shenzhen, well, tell us in the comments.